Good morning and welcome. Patriot Radio News Hour. Joe and Jason. Jason will be here momentarily on this Thursday. And we got all the numbers, retail sales, CPI, and all the others. The CEO of Goldman was out today. Jamie Dimon from J.P. Morgan Bank was out today. Another Nakamura Bank was out talking about bank failures and how many they expect. The list goes on and on and on. A lot of things that we need to talk about today, and it's just going to be an action-packed show. The markets today, gold and silver are red hot. This is just right along the lines of what we were expecting the other day. The CPI numbers, everybody was expecting a miss to the downside, not because inflation was getting any better. No. Not because inflation was getting better, but because of the way they, quote unquote, calculate the inflation. They were supposed to get a lower number. It didn't quite work out that way. It was close. I guess it really wasn't close. But it was what they called in line. In line. So what does in line mean? In line, they said headline number. Month over month, you're looking at an increase of 0.3%. Year over year, we were looking at a number of 3.4%. Last month, the headline number was 3.5%. So I guess they got a lower number, but they were really hoping for a significantly lower number than that. They didn't get the number that they were hoping for. Energy costs re-accelerating, car and truck prices, gas, that came down a little bit. The core up 0.3 year over year, 3.6%. So, Jason, I guess it was lower, but just barely lower, and they were really hoping that it was going to be a lot lower than that, so they didn't get it. Gold's up 25, silver's up almost $1. Silver's over 29, headed to 30, and copper, our old friend copper, back to over $11,000 a ton.
Yeah, these inflation numbers. I think the Fed secretly thinks they have control over this, and if that's true, if that guess is true, then they want the higher inflation, and they got exactly what they want. Because I was looking at the 2023 year-over-year CPI, and the February number was 6, and then the March number was 5, so it dropped a full point. Well, February to March of this year went from 3.2 up to 3.5. It's very, very controlled. It looks very much like they want higher inflation to be at a certain level that they feel that they control. Well, the next 2 months, there's 1 point drops in 2023 from 4.9 to 4 and from 4 to 3. I don't see anything but going up about 0.3 of a point like it did, like I said earlier. So we could look at 4% inflation with the June number. It just very easily could happen.
Let me tell you what they're thinking. Here's what they're thinking. Because they're trying to make this appear really good and say, well, okay, it's going to be next month. We're going to get the big drop next month. Because what they're trying to say is that, hey, the big excess in the core number, that 3.6 number, was resulted from housing and auto insurance. Right, so somehow it's okay. See, the housing number and the auto insurance number. What can you do, right? And you think about, okay, what's your biggest expense? Housing, right? And then, of course, 99% of the people out there got to pay insurance, whether it's auto insurance, home insurance, medical insurance, you name it, all the insurance costs. But somehow that's what they're saying. That was, if it wasn't for those things, if you didn't actually live in a house or an apartment, if you didn't pay a mortgage or pay a rent, and you didn't own a car, in other words, gosh, if you were homeless, it would have been fine.
I guess except for going to McDonald's to eat.
Right.
Bums have to eat too. I mean, what are you going to eat? It's, yeah. Even if you're homeless, the inflation will touch you for sure. I mean, let's face it, the guy standing out next to the highways begging for coins and dollars probably might be getting a little less on the corner there these days, Joe, because you can only give it if you have it, right?
Yeah, and of course, we're sitting here now watching all of this play out. The 10-year note down. This was already the 10-year note was going to go down today, no matter what, because they were all thinking, they were positive about the number. They didn't quite get it, but the other side of it, retail sales. Now, this was supposed to be up 0.4%. Nowhere close. Matter of fact, retail sales for the month before was revised lower, and then this month it came in at 0. So no growth in the consumer. And you think about, you said headline inflation was 3.4%. If it didn't go up at all, right, month over month was up 0.3%. That actually is like a negative number. Unchanged, it's a negative number. So the consumer definitely starting to show they're out of money. We'll be back. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Thursday. We're trying to help you here. Diversification is going to be paramount, especially when we get into today about Goldman Sachs and JP Morgan today, talking about debt loads, talking about the government, talking about spending, inflation not letting up, at least not the way they told us it was going to be, and now just say, hey, if you're homeless, it would have been okay. So therefore, don't worry, be happy. It's not going to work out that way. Get that gold and silver put away. I don't know what people are waiting for. You need to get diversified now. I don't know. Do you got 3 more months? Maybe 6. I don't know. But this bubble that is the debt markets, the lack of true price discovery is getting ready to come home and burst here. You look at retail sales. How about Red Lobster, how fast that was. They first said it was 24 stores. Then it was 48 stores. Now it's 100 stores, right? Yeah, I mean, that's the type of things I think we're going to see here. But let's look at these markets here. The Dow's up 250. Because they still want to believe they're going to cut rates in September. They're going to cut rates in September. If they do, it's not because they wanted to. It's not because they got inflation under control. But inflation's not going to be 2% in September. It's just not going to be. It's going to be because they're going to be forced to. We'll see. And that's not a good place to be. The S&P's up 40. The NASDAQ's up 150. The 10-year note, as I was saying earlier, 436. Yeah, 436 on a 10-year note. It's kind of funny because, as we know, that's wishful thinking in the paper markets. Crude oil's unchanged. Gold, I don't remember, Jason, the record high close. We may hit that today. We're right near 23.90, just below 23.90. Silver, The rocket ship that we said was going to be silver, it is building here again, up another 90 cents right now, $29.40. And again, like I said, these are not the big moves. These are not the big moves. Before it's too late, get more diversified. You got to be more diversified this time than you were the last time. If you weren't diversified at all during the financial crisis, and a lot of you weren't, now's the time to do it. For those of you that were responding, hey, yeah, Joe, I was buying my gold and silver back then. Well, you know what? You got to keep adding to it, and at the same time, whatever you have in Wall Street, get diversified there. It's gonna pay a dividend for you. That's why we keep talking about why refi. You got $50,000 or more. Maybe you got an IRA. Maybe you got a lot of money in that IRA. Roll some of that over into a gold and silver IRA. Call Y Refi, get some of it over there. You can get up to 10.25% fixed rates of return. You can use it as income. You can compound it. You can do whatever you want. And here's the thing, not correlated to Wall Street. It doesn't care that our government's going to spend us into oblivion. They don't care. They don't care about debt auctions. They don't care about Jay Powell watching his data. So sick of that guy. What are you doing, Jay? Well, we're watching the data. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24. But Jason, we saw the number on CPI. Not as low as they wanted it to be, but don't worry. Somehow, hey, sooner or later, right, eventually enough people won't be able to pay the rent so it'll go down magically, right? I guess that's what they're hoping for. But retail sales coming in flat, like I said, their number, not mine, said headline CPI month over month was up 0.3%. So, and obviously, really, what does that mean? Well, it's probably up, 0.6 in real life, right? If we're being honest. Retail sales being 0. Jason, that's actually a really big miss, right? That's way below. That's saying, hey, I couldn't even buy the same amount of stuff this month that I bought a month ago.
That's the way it feels, doesn't it, Joe? About everything, I mean, yeah, maybe if something goes up last month, it doesn't go up this month, but then another thing you're buying goes up the next month. And for whatever relief you might get for a month or two for something not going up, you have 2 or 3 other things on your grocery list, so to speak, that's going up. And every month going up. And in record high gold, Joe, with the two exchange, the two ways we look at it, a 23.65 and 23.86 are record closes. So we're past. It looks like we're going to pass that.
Yeah,
today.
right now we're 23.91. Right now, silver. This would be. It's not a record high close for silver, but this would be the highest close. Silver's now almost 29.5. This would be the highest close for silver. Woo! I don't even know, Jason. Long time. The high close on silver right now, and again, we'll see where it ends up, but it's off to the races here as inside this retail sales number. Here's the bad part. The headline number, which was flat, that was the good part of the number. X autos, X gas. Apparently they liked that number. That was down 0.1% month over month. And then what they call the control group. This is for GDP. Okay? So think about how you don't use the actual retail sale, the whole number? Oh, no, of course not. No, we use this control group. Why? I wonder why. Oh, wait, it's got control right in the name, right? Yes, because we think we can control it better. That was even worse. Down 0.3%. It's the third big miss in this number in the last 4 months. So it looks as if we are definitely, now I'll say this. on the side of the Fed needs to cut rates, retail sales was definitely an indicator that the consumer now, think of like a car, right? They were in fifth gear, and then it kind of shifted to fourth gear. The consumer, Jason, we may be down to third gear here.
Yeah, I think you're right. Yeah, it's we talk. We're going to beat that inflation drum to death, but that's what's causing a lot of this hardship that the markets are going to be seeing and continually feeling. And Joe, if you start, you have me looking at the gold prices closer, and boy, if it closes at record highs today, we're back where we were last month. If it closes higher on Friday and starts Monday up again, that Friday, Monday, then we could have 2,500 gold the Friday after this one. That easy. So you mentioned earlier in the week, or was it last week, that maybe May is what's going to start. It's going to come a little sooner. If it closes record high today, then it's up Friday. So if we have specials Wednesday, Thursday, Friday, you better jump, because if gold opens higher on Monday after a Friday going up, if that happens, we're looking at, I would say, 2,500 gold the following Friday, Joe. So it's, for those people who thought you missed this rally that happened, gold is a leading indicator of inflation. It's not reflecting, it's leading. And if you look at copper and you look at these other commodities going up like this are a leading indicator of inflation. And we just had a spike in March, April. And now we're going to, is it going to spike again in May before even June comes, Joe? 3,000 gold might be a short forecast for the end of the year, Joe.
Well, I'm just, remember we got the producer prices yesterday. It was actually hotter than the CPI today. The CPI said 0.3% month over month. The producer prices was up 0.5 month over month. So, again, I don't know. I think there's a lot of things at play here. There's a lot of banks that are really teetering on the brink here. As Nakamura came out now and says, hey, there can be at least 50 bank closures between now and the end of the year. And Jason, you're getting to the point where, hey, that could be 2-3 a week. As this thing starts to go here, simply because not only are we know about the office space, everybody knows, right? The office towers are just getting their backsides kicked in. Nobody's in them. They're not paying the bills. They're sending the keys back, all that stuff. But the New York Fed survey yesterday about delinquencies, huge increase in consumers now missing at least one debt payment. They're even starting to see consumers, Jason, starting to miss mortgage payments. That's the one thing, if you're locked into one of these low mortgages, that's the last thing you want to do is miss a mortgage payment, and it's starting to come.
Missing payments is the clear indicator that things are on downward trend. And if they're missing mortgage payments, Joe, that means they've already been missing the credit card payments, right? And I don't know where school loans fit in there, but so I think some people know that you can't bankrupt your way out of that. So maybe that's the absolute last thing you miss is the school loan payments. Maybe I guess, Joe, if you got all these things going on, what do you pay and what do you don't pay, and eventually it turns into you don't pay any of it, right, Joe? And that's when things get really rough.
I think that's kind of where we're appears that we could be setting up. It's still early, right? That's I guess, hey, what's the saving grace in all of this? It's still early. You still have time to make these payments. But Goldman Sachs and J.P. Morgan both out today expressing huge concerns about the national debt, about the Treasury market. And these are companies you got to pay attention to because, Jason, you're right. They're the players in the Treasury market, right? These guys get paid to do these auctions, and they're just seeing the overwhelming supply here. And outside of, like I said, we got another week or two, right? The debt's going to be $35 trillion here in a couple weeks. looks like we're going to hit 37. It could be higher depending on interest rates before the end of the year. And now everybody's talking about, man, next year we may have to be over. We may set the record for national debt in a year next year. Worse than COVID. Think about this. The government shut it. Nobody go to work and pay everybody more than what they were making. And you're telling me next year we're going to have the largest debt ever and say it cannot continue. The one good news in that, Jamie Dimon said, we've got a couple of years. So, Jason, there you go, right? We got a couple of years. It won't be the big problem this year or next year, but after that, right, who knows?
It's better to be on top of your finances before you hear big entities talk about the big problems. Joe, do you remember a time when the big companies, the big banks, they wouldn't even whisper anything about any stress or any problems? Now it's like I guess there's a green light to at least talk about how bad it could get, even with the banks and with all these entities. They used to. No, it's always good. The stock market's good. It's all good. The banks are good. You never hear anything about anything being stressed. Now it's hard to get anybody to say, "Oh yeah, everything's great," except for the guys on the TV set, right?
The Dow's going to be at the stock market's going to close near record highs right now. Look, yeah, everything's real good, just on the top. 800-951-0592. Gold's up 30, silver's up 91 cents. Yeah, you heard that right. Looks like right on the cusp here of record high close in gold. This will be a multi-year high close in silver, and it's just the beginning. Yesterday we ran some Indians on sale. I have some Indians. I do. I've got $5 Indians. They're more expensive today. This is just what it's going to be. 1 through 19 at $700. That's the same price as a $5 Liberty. 20 or more, $695 at 800-951-0592. These are quarter-ounce gold pieces. These are the Indians, and it's incredible. These are going to be out of sight very soon here, and again, we'll probably this year. I've sold more Indians this year than I probably have in the last 3 because you just don't get quantities like this. Take advantage of it. Continue to stack it up here at 800-951-0592. I mean, $20 gold pieces today, $2,620. So, before they're $3,000, before you're paying, $5 gold pieces, why do I have the feeling by the end of this year, Jason, we're probably going to be talking $900,000 a pop on just a quarter ounce of gold. Get them put away. 800-951-0592 before I get to Goldman. So the Goldman Sachs CEO started freaking out about the debt and how big of a problem it really is. And I want to give you some perspective on exactly what it is that we're talking about. In the number just released, so this comes out from our own Treasury Department about how much debt the United States is really going into when we look at it for the first, I think this was I want to say May 8th. Yeah, May 8th. So this is a number released last week. $514 billion spent on interest on the debt so far this year. Well, we know how to do math. That's way over $1 trillion. Right? Remember what Bank of America said. By the end of the year, we could be up to 1.6 trillion. By next year, 2 trillion. Trillion. How bad is that? Well, let's see. National defense, $498 billion. Yeah, we're spending more in interest than we are in defense. How about Medicare? Now, this isn't Medicaid. Medicaid's a bigger number. How about Medicare? $465 billion. I mean, Jason, it is the fastest growing part of the debt. It's currently greater than all the money. So, when they think about, we're going to cut spending, where can they cut? Well, look at Department of Education, $128 billion. Transportation, $70 billion. Veterans, $183 billion. Jason, there's no money. Right? There's no money. And all of a sudden now these CEOs of these, think about this. Goldman and JP Morgan today alone, they're two of the top 6 quote unquote biggest banks? Both of them saying, guys, hello, is anybody out there paying attention right now? And I don't think they are.
Just looking at just total taxes collected last year, they report that they got $4.7 trillion in gross taxes. But do you even believe that number, Joe?
Well, most of that's FICA. So that's right. Social Security, Medicare, right? When you strip that out, it really isn't a lot. We're not getting a lot from corporations because of all the loopholes. And again, though, think about this. We are collecting closing in on, somewhere, $4 or $5 trillion in taxes. And we're talking about a budget deficit for 2025 that could break the record of $3.2 trillion. I mean, you could get rid of every program that wasn't Social Security, Medicare, Medicaid, defense, and the interest on the debt, and we'd still run a massive deficit, right? This is the problem at hand. Going to Goldman Sachs, rising debt is going to put upward pressure on interest rates. Without reforms to reduce the debt, the interest cost is going to keep rising, crowding out all other priorities and burden future generations. Give me a break. It's going to burden this generation. We are, this future generation that they keep talking about. Yeah, anybody that's alive listening, yeah, you're that generation, Jason. It's just that simple.
Well, and when I was looking at tax collections, which I don't even know if that's what they're actually pulling out of the American public, but it's all the gap is filled with printing money. And so, Joe, this is what I've been saying. We're going to have these higher rates, and I think there's going to be printing. When the markets crash, I don't see that the rates go down this time. If gold bursts like it did, and let's say gold bursts again like it seems like it may, that means if that's a leading indicator, how much inflation is coming? How bad is it really going to be? They can't lower the rates. If markets start to crash amidst that, if we start to see the jobless stuff that's going on, the non-payment of credit card bills and mortgage payments and stuff, what are they going to do? Lower the rates? And then really see the inflation go crazy? Because when I'm looking at the CPI numbers for the past few years, like I said, there's a nice controlled little thing going on there. I don't think, Joe, that lowering the rates is going to stay on top of the inflation the way they want. So that means printing, right? That means print. All those numbers you just rambled off, that means we're going to have, 5% Fed rate, 6% Fed rate, and we're going to have trillions more dollars printed. Because there'll probably be a war or some sort of emergency that spurs the excuse for the printing and the economic damage that's coming, Joe.
I'm just going to say it is going to be an overwhelming tsunami when we look at what can be done, because they're essentially just saying we're just going to step on the accelerator. We see the cliff. I mean, JP Morgan, Jamie Dimon, 60 days ago, said, hey, we have less than 10 years, and we're driving 60 miles an hour towards the cliff. Well, today, all of a sudden today, it's like, hey, listen, we got a couple of years. Apparently, we stepped on the accelerator. Patriot Radio News Hour. We'll be back. 800-951-0592. Patriot Radio News Hour. That's the toll-free number you got to call. $5 Indians on sale. $700, 20 or more, $695. If you're brand new, you know, everybody listening, you know what you need to do. And I'll say this. There has been an improvement from the financial crisis. A lot more of these CEOs are out there warning you, telling you. Remember the last time? I don't know if people do. People, we got short memories. Remember, Lehman Brothers CEO was out on TV telling everyone, oh, we're fine. And then they go, how about Bear Stearns? Their stock was like at $42. The guy does this big interview on TV in less than, a matter of, I don't know, a couple of days. They got to have an emergency weekend meeting to give Bear Stearns to J.P. Morgan for $2, right? You're not hearing them say that right now. What are you hearing them say? What are you hearing these CEOs say this time? We got a problem. And nobody seems to want to take it seriously. And, of course, the Federal Reserve, they're hiding it. We talked about how many times have we talked about price discovery? Why is the Federal Reserve playing all these games? Because they don't want price discovery. Why don't they want price discovery? Well, because if they had price discovery, right, well, gosh, Wall Street wouldn't be at all-time record highs, and everybody would freak out. Jason, it's coming. Any of you new people out there, if you've never ordered from us before, you just call the number and you just say, I want the special. That is all you have to say. And you know what our girls are going to do? They're going to say, how many would you like? That's it. Right? If you're in Arizona or Colorado and you want to pick up, we've got offices in Fort Lupton and Colorado. We got an office here at the Deer Valley Air Park. You can come in, pick up your product. We're not a coin store, right? You don't need to be making purchases, especially big purchases, and have, the guy that just stole grandma's jewelry in your store, right, and watching you. You don't want to have privacy is a big deal for us. It should be for you as well. You can pay any way you want. Personal check. If you want to use a credit card, we charge only 2%. Nobody does that. Nobody. We only charge 2%. Cash, whatever you want to do. Bank wires, we can help you do it. If you're not close or it's just not convenient, we charge a flat $35 to ship. We ship FedEx. Pretty simple. And it's there 2 days, lickety-split, at your doorstep. What happens after? You guys are going to call me. You're going to put me on a list. You're going to do... No. I don't care. Listen, you can buy one coin. I'm going to buy one Indian for $700. Or you may say, hey, I want to buy 50. You may call up and say, I want to do $1 million. We do $1 million orders all the time. You'll never get a phone call from us. We won't even send you an email. I mean, that's how much we value privacy here. It's a little different. I know it's not the way you're supposed to do it, but that's how we do it here. 800-951-0592. That is our toll-free number. allamericangold.com is the website. If you don't believe me, you can order online. Order online. Then you don't have to talk to anybody. We don't care. That's just how we operate. The New York Federal Reserve said at the end of the first quarter, U.S. household debt reached a record high, and borrowers are struggling to keep up, according to the survey out of the Federal Reserve Bank of New York. Well, where do they get that information from? Oh, let's see, the banks. right? The credit agencies, the reporting agencies, they're saying that an increasing number of borrowers are falling behind on credit card payments. Okay, we know that, right? Here's the thing. Every month it gets a little worse. Every month. A little worse, a little worse, a little worse, a little worse. But they weren't done. That didn't end there. Consumers are facing a financial squeeze, and they're maxed out their credit cards. They've fallen behind on payments. Savings rates are now back to near all-time record lows. And then they said not only are they missing credit card payments, auto loan transactions that are now seriously delinquent are now rising for all age groups. So remember, this just used to be a month, 2 months ago. Jason, they were saying the auto thing was subprime problem, right? Subprime. Now they're saying, wait a minute, we're starting to see it now across all groups. Add that to the list. And even the St. Louis Fed kind of echoed the same thing about where the consumer is heading, and they're saying that delinquencies now are rising at a faster pace than before the COVID pandemic. So, Jason, this is definitely another one. I guess when you looked at the three reports today, inflation, that wasn't the good one they were hoping for. But retail sales was not good. But then the New York Fed talking about delinquency rates and the maxed out consumer, I guess in that regard, that could favor a rate cut in September. 800-951-0592, Patriot News Hour, final segment coming up. 800-951-0592, once again. $5 Indians, 1 through 19, $700. Same price as a $5 Liberty. Buy 20 or more, less than a $5 Liberty at $695. We got $20 gold pieces right now, $2,620 as we got gold sitting right here, $23.90 an ounce right now. How about Silver Eagles? Remember Silver Eagles? We were begging you last week to buy. I begged you. I did. I begged you. $775 on rolls of Silver Eagles. I think we were at about like $735 last week. There's only, it's sad. Listen, this isn't to scare you. This is just facts. This is reality. Right? All the data that Jason and I share with you, we don't make it up. This is the numbers they put out today. I'm telling you what the CEOs of the world's largest bank, the America's largest banks, are saying about the Treasury market. I mean, look at it. It's moving like a meme stock, for crying out loud. All the crowding out of spending, it's overwhelming. And if we really get a slowdown, you know what? If we really get a slowdown, what is tomorrow's jobless claim number going to be? If it's above 230, if it's 240 or 250, which still wouldn't be horrible, right? I don't know. It'll be record high gold if that's the case. I don't know what it's going to be. But remember, they freaked out about 230 last week, Jason.
And if we get more bank closures here in 2024, that'll put a lot more pressure because the liquidity will start drying up even further. I mean, I like looking at the historical stuff, Joe. I mean, 2008, we all talk about 2008. There was only 25 bank closures that year, but there was $373 billion in losses. But last year, just those 5 banks that closed down, $548 billion in losses. And it's the next year, Joe. So we're in the next year. We're the year after that now. Okay, more in losses and less banks closing up. But the next year, 2009, 140 banks closed. We're in the next year. 6 times as many banks closed. The amount of dollars in losses, well, the banks were starting to consolidate, so the losses were lower. But Joe, it's not so much the losses, but it's the liquidity, right? That's the problem with everything tightening up like this. And the Fed only has one way to help solve that, I think, right now, and that's to print. So we're going to see. We're going to see, Joe, if that's what they're going to do. If like you said, the jobless claims go up, and more Rod Lobsters are going down, and more debt forfeitures, people can't pay their debts. If all that stuff starts to happen, all they can do is print. Because what are they going to do? Lower the interest rates to stop inflation? I doubt that, Joe. It's just where we're at, right? That's just where we're at. Gold's at record highs. Copper's getting, I think if it's not, it's close to record highs. Silver's on record highs, but if you take out the spikes of silver, it's really sitting in a record position for a long period of time, Joe. So this is what we've been telling. Joe, you've been doing this for years. I don't even know how I would be able to think about this, doing this over 20 years, telling people this is an asset to protect yourself. It's sometimes just beating an old drum over and over again, but it's a really faithful drum, isn't it, Joe?
Yeah, I mean, we really, things changed. The financial crisis really highlighted the weakness that was all of the spending that kind of tries to hide everything. And now we're at that point where it's going to crowd it all out. 800-951-0592. Jason and I, we're going to come right back with the Half Empty Cup.